Can you have two VA loans at the very same time? This is one of the most common questions veterans and active service members have. The short answer is absolutely yes. The key is having a strategy on exactly how to do it. Most veterans make the biggest mistake by buying their first property the wrong way, which essentially keeps them from getting multiple VA loans. Now, in this video, I'll showcase how you can utilize your VA loan not just once or twice, but multiple times by doing it the right way. Now, if you just by chance stumbled across this video because you were curious whether or not you could have multiple VA loans, I'm telling you from experience, I actually had a duplex and a quadplex out at the same time, utilizing my VA loan on both. What's up, guys? My name is McKeown, and I'm a licensed real estate agent in the Dallas-Fort Worth area. And in today's video, I'm going to be discussing multiple VA loans. But before we get into today's video, if you guys are finding the content on this channel useful, please give me a like, subscribe, and turn on the notifications to always be notified when I release another video. So first things first, you have to do the obvious, which is buying your first property with a VA home loan. Now, this step is crucial because it affects your options for getting more VA loans in the future. Your first property could be a single family home, a condo, a townhome, or even a multifamily home like a duplex, triplex, or quad. Now, with a VA home loan, you don't need a down payment. PMI or private mortgage insurance and the underwriting requirements are flexible to make home ownership more accessible. And I think this is when things start to get muddy for folks. And it's the fact that the VA loan has no loan limit. Now, since January 1st, 2020, the Blue Water Act allows veterans with no existing VA loan to purchase up to what they can afford without a large down payment. This change obviously makes luxury or more expensive properties accessible for us veterans. However, if you buy a high-cost property, it might limit your ability to purchase another one with 100% financing down the road. County loan limits come into play once you have an existing VA loan, and these limits will vary by county and can affect your overall ability to get another loan. Now, let's go ahead and use an example where I'm actually a licensed real estate agent in Dallas, Texas, and the county loan limit here is $766,550 as of January 2024. So let's say that first home that you're going to utilize your VA loan for cost about $300,000. Well, your remaining loan limit would be $466,550. This amount can be used for your next property as long as you meet the income and credit qualifications. Now, one thing that I will say, and this is through experience myself, if you look at just traditional single family, duplex, triplex, or quad loan limits, they're going to go up, meaning a single family, as I just mentioned, is $766. But on the flip side, if you look at a duplex, the loan limit actually goes up because it's 2 units essentially rather than just one standalone single family home. However, this is a key thing for you to know, especially if you're a planner such as myself, knowing that, hey, I plan to purchase X and then down the road I want to purchase Y, and down the further road I want to purchase Z. Well, pay attention here, guys. As far as the VA loan goes, it only conforms to single family loan limits, meaning if I want to purchase a duplex, sorry guys, still $766,000. If you want to purchase a quadplex, unfortunately, you're not going to have an increased loan limit because you purchased a quadplex. It's still going to only conform to your single family loan limit, meaning that here locally in Dallas, $766,000. Now, I'm not going to go into too much detail in terms of going over your loan limit because I'll get to that a little bit later in the video. But the main premise here is if you are trying to sneak kind of 2 VA loans in under that loan limit, and also just keep in mind every single year, for the most part, that loan limit has been going up, just make sure you don't exceed that amount. Now, it's not to say that you can't, but again, I'll be discussing that shortly. But before I do that, let's talk about preparing your house to rent. If your plan is to turn your first property into a rental, you'll need to live in it for at least a year. During this time, start researching rental rates and get an idea of how much you can actually charge. Make necessary improvements to your property strategically, focusing on those that increase rental value. Decide if you will manage a property yourself or hire a property manager, and start building a rainy day fund for unexpected expenses. Now, I will make a side note here. I purchased a duplex, and 4 months later, I moved out to a single family home utilizing a conventional loan. Now, I'm not going to sit here and say that that was what I planned. I'm not going to sit here and say that that is something that will get approved every single time. My particular situation back in 2017 was I needed to purchase a duplex. I didn't care. I had been trying to invest and purchase a duplex in San Antonio, but I wound up moving to Dallas in the summer of 2017 and was just ready to buy a duplex already after failing to do so for about a year. Now, lo and behold, after I closed on that duplex in July of 2017, I I began to realize that the location compared to where I was commuting to work wasn't really ideal. I also realized that I didn't love living next to a tenant. I also didn't love parking what was my rather expensive car at the time that I rented out on Turo in a carport. So there was a handful of reasons why I moved so quickly to my next property, but I definitely didn't go VA loan to VA loan in 4 months. Now, the second VA loan actually came about 2 years after that in 2019, where I moved from property 2 to property 3. So yes, it would be highly recommended that you wait a year wherever you do wind up purchasing your property with your first VA loan. If you intend on using your VA loan again, especially if it's within that first year or slightly after that first year, make sure that you're working with a mortgage broker that can kind of shop your situation, whether it's for work, whether it's just for pleasure, or whatever reason you're moving so quickly, to whatever multiple brokers that they work with and find out who is actually able to get you approved. Now, once you are prepared, it's time to get your VA pre-approval for your second VA loan. Now, a VA loan specialist will review your income, assets, credit, and liabilities, including your existing mortgage. Now, the VA loan allows you to use up to 100% of your rental income to offset your mortgage payment. This rule, called the departing residence rule, makes it easier to qualify for another loan. However, some lenders have overlays that may actually restrict this, so ensure your lender follows VA guidelines and aren't overly strict with their overlays. Now, depending on your situation, meaning your income, your debt, your overall portfolio, you're really going to need that rental income to offset your debt to be able to purchase the next home. Now, there are certain overlays and certain aspects of utilizing the VA loan that require you to have property management experience. I've seen it kind of both ways. I've seen individual lenders that basically bypass the need for offsetting that income, even though the individual client that I'm working with doesn't have any property management experience. Then on the flip side, I've had lenders basically not qualify a particular veteran because they've moved into a single family home, they've got a lease already set in place for that single family home, and they're moving into the second property, but because they don't have any landlord or property management experience, they can't use that rent to offset it. I think honestly it's kind of a silly requirement, because at the end of the day, if you have a lease in hand and a deposit already set aside from that tenant, then yes, you should be able to offset that. But just make sure you're working with a well-versed agent in your local market, and if you're not, reach out to me, leave a comment down in the section below, hit me up on Instagram, or shoot me a text, whatever way you possibly can, because I can get you connected not just with a lender locally to you that is going to be super knowledgeable with VA loans, but I can also get you connected with a tremendous agent as well that more than likely is a veteran themselves. Now, earlier I mentioned possibly going over your loan entitlement, and in this case, this is when you're going to need down payment. The VA essentially requires 25% of the amount that exceeds your entitlement to be put down as a down payment. So for instance, if your new property costs 100 grand, more than your entitlement, you're going to be required to bring $25,000 at closing as a down payment. Now, this is certainly a better deal than conventional loans, which have stricter requirements and higher interest rates. Also, if you're not putting exactly 20% plus down, you still can have a small down payment required for a VA loan because you went over your entitlement, but still take advantage of the fact that you don't have PMI, even though you put down less than 20%. Now, the other option is to free up your entitlement by refinancing your first property to a conventional loan. Now, this restores your VA loan entitlement, allowing you to purchase your next home with that entire 100% financing. Now, I think this is probably the biggest misconception that I have is everyone that reaches out to me, and for whatever reason it may be, a lot of my VA loan or just VA related content videos have garnished a substantial amount of views from people that very well know what they're doing to people that have no clue what they're doing when it comes to just benefits, mostly from the use of your VA loan. Now, when people mostly reach out, they're asking, hey, I have one property with my VA loan, I need to be able to refinance it. No, you don't have to refinance it. Honestly, it only makes sense to refinance and pull that entire entitlement out if you actually need the entire entitlement for the next purchase. Now, a good example would be if I still had my 2 VA loans for my duplex and my quad. I'll just give you my particular example to have it make a little more sense here for you. I purchased my duplex for about $300,000. I then purchased my quadplex for about $400,000. Between those two, back in 2019, I went over slightly my entitlement. So any future property, if I wanted to utilize my VA loan now for the third time, I don't have any entitlement left. So any amount of purchase, I'm gonna have to put 25% down. That means if we're looking at $1 million home, I'm gonna have to come up with $250,000. Now, if you haven't heard my story, I have since sold those 2 properties and upgraded to larger investments, one a conventional and another a commercial note. So right now I have my entire entitlement available, and I'm actually going to be refinancing a construction loan after I actually start the construction loan for building my dream home, likely in the year of 2026 when that is complete. So stay tuned and make sure to subscribe to my channel, because I haven't even begun building that almost $4 million house. Now, as I mentioned earlier, it's important to work with a VA loan specialist who is up to date with all of the VA loan rules and can guide you through the process, avoiding costly mistakes. I can't tell you how many people have reached out to me and kind of wasted time, money, potentially earnest money, costs of appraisals, to wind up finding out that the lender that they're working with, or maybe the agent that they unfortunately have been working with, didn't really understand VA loans as a whole. And I'll be honest with you, it's part of the real estate industry that is not discussed often enough, meaning that there's just not a lot of education for agents and lenders out there. So it's very common to see veterans such as myself being screwed over, which is the main purpose why I create this content, is to educate you guys, but to really get you connected with agents and lenders locally in your market, or with me if you're in the Dallas-Fort Worth area, who can help you kind of plan out how to leverage and use your VA loan to its best ability. And that's all I got for you guys this week. Can you use your VA loan more than once? The answer is a short and resounding yes. You can use it as much as you want. Just be aware once you go over that entitlement, it is going to require a pretty substantial down payment. Thanks again for watching, guys. Make sure to like and subscribe. It really does help. And stay tuned for the next video.